Priscilla Barrera with the Investing News Network, and here with me today is Ken Hoffman, who's co-head of EV battery material research at McKinsey. Ken, thank you so much for joining us today.
Thanks for having me.
All right, so we're here at PDAC. Yesterday you were giving a presentation about battery materials and also battery technology. I wanted to start by asking you, has any development surprised you in the past year in that area?
Yeah, I think what's really surprised a lot of people, and ourselves included, is the rapid change of pace. I talked yesterday about how artificial intelligence is being used to create batteries, and what normally would take 2 years of development time is taking 16 days. So you're seeing very, very rapid forward movement of battery technology. So things we thought might happen in 2025 are now happening in 2021 and so forth, and that's been a huge change.
Right, and speaking specifically about battery metals, have they performed as you expected last year and this first few months of 2020?
Well, I mean, last year you had China sort of come off giving a lot of subsidies for cars. That obviously sent their sales down. Beginning this year, disaster in China with coronavirus. And so I think from that standpoint, things sort of considering went to plan. But I think the big focus now and what you're seeing here at PDAC is the shift over to Europe. This is the first year you've actually seen Europe have an interest in EVs, new policies, new plans, and in December, the third best-selling car in all of Europe was the Model 3. So it shows you that EVs are becoming a real reality in Europe.
All right, and I want to circle back for a second to coronavirus, which is obviously a big theme globally, but here at the conference, and speaking specifically about battery metals, what would you say it's the impact and what can we learn from this Black Swan event?
I think the biggest impact is you'll hear this term localization, that instead of the world really relying on a lot of its battery materials coming from China, in particular, who really took the lead, that you're seeing more and more, even Chinese companies invest into Europe. So look for more refineries and look for more development of the materials inside of Europe rather than being reliant on it being shipped in from overseas. And I think there's two reasons for that. Number one, coronavirus pointed out the weakness in the global value chain. And number two, the European regulations are really specifying if I'm buying my nickel from X mine, I need to know that it was responsibly produced, that there was no pollution, that it was ethically produced, and everything about that value chain needs to be cataloged and being brought right into that EV value chain, and that's very difficult for a number of Chinese companies to do at this point.
And I also wanted to ask about something you mentioned yesterday at your presentation, where you said when you're looking at a company, it's not only important to have a good geologist, but also a great commercial team. Why is that?
Well, really, when you want to sell into the EV battery train, you're really selling directly to the OEM. And the OEM needs to control, both by regulations and what they really need to have within that battery specification, exactly what's in that battery. So if I have a mine, I'm no longer a commodity producer. If I'm interested in the value chain, I'm going to have relationships with the refinery. I'm going to have, and that relationship's going to be with the cathode active material producer and the cell manufacturer and the OEM, and I'm all linked together. If I'm just saying I'm going to sell you my material, which you're used to in commodity land, that just doesn't work, and so you're seeing companies who have these long-term relationships and contracts can actually over time get a 1,000 to 2,000 basis point increase in their margins relative to sort of what we call merchant suppliers who are just dumping their material into the marketplace.
All right, and speaking about relationships, I also wanted to ask you about partnerships between junior miners and big producers. How is that important, and why should investors be looking at companies that have those partnerships?
Well, certain materials are going to be in short supply. I mean, we believe that nickel is going to be the one metal that will be the first one hit. Most of the battery technologies are trying to increase as much as possible the nickel content, and it can only be a certain type of nickel. So in order for that to happen, those juniors who have the right deposits are being asked by seniors, hey, can we work together, or being asked by car companies, et cetera. And so they'll be integrated into that value chain, but only if they have a plan up front to be integrated into that value chain.
All right. And I guess one of the big news we heard, I think earlier this year, was this sort of revival of LFP battery technology, and many investors got scared about the future of cobalt and nickel. Do you think they still have a future to grow, and why is that?
Yeah, there was the news from China last week that CATL will be providing LFP batteries to Tesla. Interestingly, Tesla didn't make the announcement, which is very odd for them not to make such an announcement. we've explored this quite a bit, and what we find is the car companies are becoming really adept at reducing the control systems and the battery packing. And when they reduce those and constrain those, it gives them a lot more room to put battery in the car. And so what Tesla's doing is saying LFP batteries, which are a lithium iron battery, they don't really hold a lot of electricity, but if we stuff a lot of it inside the car, we can get a decent enough range. And talking to these companies about what does it mean for the nickel, cobalt, lithium batteries, they've said, look, the same thing holds true for that. And so what that really tells you at the end of the day is you will start to see 1,000-kilometer cars, and yes, in order to get a 1,000-kilometer car, which is what the public wants, then you're going to have to use a nickel, cobalt, manganese battery.
All right, and I want to stick to cobalt for a second. What do you think the future holds for cobalt?
Well, in terms of the battery itself, cobalt is really there to hold the structure together, and so from that standpoint, by limiting cobalt and putting in more nickel in its place, you actually get a better battery. So that's why you've seen that movement to lower and lower cobalt content. The lowest cobalt content is an NCA battery made by Panasonic for Tesla. It has about 3% cobalt. And so the car companies are moving that down. Could we see a nickel, manganese, aluminum, or a battery without cobalt? Possible, but no one's invented it just yet. So for the time being, what we see is a number of the big producers have cut back on their cobalt production, and the car companies are ramping up supply, and so less cobalt, but many more units. So for the time being, cobalt looks okay.
Right. And yesterday you said one of the questions you get asked the most is where battery technology is headed. So where is it headed for McKinsey?
Well, in terms of where it's heading, it's what the customer wants. And what does the customer want is they don't want to take a car worse than the car they have today. And so their internal combustion engine car gets a range of anywhere from 700 to 900 kilometers. And it can be recharged in a fuel station at about 5-6 minutes. So any car that the main part of the populace will buy needs to hit those parameters. And so a 1,000-kilometer car that can be charged in under 15 minutes, we think you'll see that in the next 2 to 3 years.
So my last question for you today, Ken, what would be your best piece of advice or suggestion for an investor that is looking at battery metals now? What would you say to them?
Yeah, I mean, I think you need to first look at the geology the way mining investors always look. Make sure it's a good deposit and has good qualities, but also you really want to be critical of management, saying, what are you doing? What contracts have you signed? Have you signed a contract with a major OEM, or have you signed a contract with a major cell manufacturer or chemical company to sell your product? If you have those long-term contracts in place, then I know that you're really interested in this industry. You're integrating yourself into the product value chain, and therefore you have a very good opportunity to succeed. If you just say, hey, I'm going to be dumping my product in a commodity form into the marketplace, you'll probably receive less margin for that, and therefore less chance of success.
All right, Ken, thank you so much for joining us today. Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today is Ken Hoffman of McKinsey.